Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to Monday's section of Wealth Matters podcast. On Mondays, I tend to either talk about investments I have done or review a platform or even look at analyze an investment. Today, I want to talk about Bitcoin mining because we just launched our Bitcoin mining investment. And what happened is that we started mining and I posted it on LinkedIn showing that our mining has been successful and blah, blah, blah. A lot of people reached out to me and they wanted to know what exactly is it, right? And right now, cryptocurrency are in hyped mode because cryptos went up like crazy in last 1.5 years. When I started investing in cryptos since in 2015 and 16, no one spoke about it. No one cared about it. There was no media. That was a good time and also a bad time. But then last year in March, when the market corrected, Bitcoin went down as low as 4,000 and it hit a high of 65,000 in April of 2021. So little over a year, it went up like 1,000%. So that's why everyone started talking about it. And on top of it, Elon Musk's of the world, Jack Dorsey, etc., started talking about Bitcoin and cryptocurrencies. So when something gets hyped up so much, I was worried that it will drop 20, 30%. No, that didn't happen. It dropped 50%, right? But I was so sure that it has to correct at some point. I just didn't took my money out because I still believe in the technology. I don't want to time the market and keep worrying about when I'm doing a lot of things already with my real estate and a lot of other assets. So right now, Bitcoin is at 33,000. It's still a good price to get in. Again, this is not an investment advice. You have to believe in the technology. You have to understand that you are in it for long term. And it's the third thing, you want to make sure that you have stomach to lose everything you invest. This is crypto. They will be volatile. If you want liquidity at some point, you will have to get out. So but believe in the technology. Like for an example, I do not invest in Dogecoin. I had put like $100 in. That's about it. That was a gambling, but I do not believe in the technology. I do not believe in the code because the code was copied from Bitcoin. It is a fork of Bitcoin. So that's why I'm not saying it's a copycat, but it's a fork means they create a copy of that code base and then they have to start writing code on top of it or develop on top. The Dogecoin developers have not updated the code since 2017, since it was copied. Like Bitcoin Cash, BCH is another fork of Bitcoin, or Litecoin, LTC is another fork of Litecoin. They have to develop or continue to code that particular fork, and I don't see any value in Dogecoin, but someone else does, and maybe Elon Musk or someone else will create some value out of it, or maybe it's just pump and dump scheme, right? This is how a lot of this billionaire buyers do, or institutional buyers do. They pump it up, they want everyone to get in the deal, and then they dump when everyone gets in. So don't wait for everyone to start talking about something because it's already too late. The same way as in when I had my cryptocurrency mining company between 2017 through 2019, we were just trying to understand mining. We were mining a lot of different coins. There was a lot of work, and the reward started diminishing when the market hit the bear market in 2018, and then in 2019. That's when we closed the shop because there were a lot of issues, and we'll talk about those when we talk about Bitcoin mining. So what is Bitcoin mining? Mining is not similar to gold mining where you mine and you find gold, but this is more like computer or hardware based mining. You have to have specific type of hardware or a computer with a particular chip which can support mining or creating or creation of Bitcoin. How it works is this computer would be, once it's on the network, it's called blockchain, Bitcoin blockchain network. Once it's on the network, it will solve a puzzle. It supports the network because blockchain is, it's basically computers connected with each other like a chain, right? And all of those networks support the entire, all of those computers support the network. So anytime you send a Bitcoin to someone else or you transact using Bitcoin, this blockchain network or this chain of computers is used to support that network. And same way, this chain of computers will solve a puzzle. There is a mathematical puzzle. Whichever computer or hardware is able to solve the puzzle, that computer will receive the Bitcoin which is created because of solving that puzzle. So before, there was a lot of competition. Now that there are companies like Slush Pool, Foundry, Nice Hash, they have created something called Pool. Like, they have democratized uh, mining of Bitcoin, right? So now instead of this computers fighting to get the resources used, they try to combine forces together, and that way they are able to generate those Bitcoins, and now the profit is shared. So instead of fighting for one Bitcoin and you get either a Bitcoin or nothing, now at least you will get some kind of reward. So that way the electricity cost or the computing power is actually used, and it makes some kind of income for you, right? So now talking about, it makes some kind of income for you. Now talking about mining, also someone asked me, why are you trying to mine Bitcoin? So a couple of things I mentioned about my mining company, where we had to figure out every week or other week which coin to mine, which coin would be profitable, which coin may just keep going up, all those things. So lessons learned, I want to focus on the coins which I think are here to stay, as well as the main coin, Bitcoin, is like gold. So I know it's like it's here to stay. Everyone should focus on, if you are just starting to invest, Bitcoin and Ethereum, or if you are mining Bitcoin. uh, Someone asked me, why not Ethereum? So let me explain the technology behind the mining. Bitcoin uses something called POW, proof of work technology, to mine. So, what that means is that some work needs to be performed by the computers to be able to generate a Bitcoin. A lot of other POW coins are, which are fork of Bitcoin, are Litecoin, Bitcoin Cash, Dogecoin, etc., etc. Whereas Ethereum is POW right now, but it moving to POS, proof of stake algorithm, starting with ETH 2.0 or Ethereum 2.0, whenever that comes out in 6 months or a year or not. So we don't want to spend a lot of money in buying the hardware and then realize after a year that we can't use this hardware because Ethereum cannot be mined. So I want to be focused on Bitcoin. And again, I'm talking about Ethereum because I think Bitcoin is gold and Ethereum is silver. Bitcoin, I mean, gold has a lot of value. It's a store of value and is always will be there, but silver has a lot of usage, including industrial, right? So like Ethereum network is used by a lot of new coins or tokens which are created. They use Ethereum network to transact. And with Ethereum 2.0, Ethereum is trying to reduce those transaction fees as well as reduce the network congestion. So that's why it's moving to proof of stake algorithm. So this is the whole reason, when we are buying the hardware, we want to be on mining the coins which will stay there for a while, as well as focused on coins which will be profitable for a long time. So this is about Bitcoin mining. On top of it, if you see that, what happens is that whenever uh, a coin or cryptocurrencies are hyped up, a lot of people jump into it. Also from mining perspective, that's what happened with Bitcoin. So when the price keeps going up, the operation costs remain same. So in my example, my operation cost is $18,000 per Bitcoin, including CapEx, all the hardware cost. And ongoing, if I remove the CapEx or the hardware cost, ongoing operation cost is $9,000 per Bitcoin. So when the price keeps going up, let's say 60,000, 50,000, these miners or people who mine, they don't have to sell a lot of the Bitcoin to cover the operation cost, or they or even get their money back from their capex or the hardware budget, right? So if they only needed 18,000, they will keep rest of the Bitcoin in hodl mode, so they won't sell it. So this is what also will pump up the price. Let's say, the Bitcoin went to 50,000. I only needed to sell worth of 20,000 every time it's mined. I'm just going to keep it because I know the price will keep going up. But by hodling it, I'm also pumping the price, because if it's all about supply and demand. Now, on the flip side, when Bitcoin goes down, small miners, which is what we were doing, we only had 20 mining hardware or computers before. Now we have 400 miners. So when you have small scale operation, when the price goes down, you cannot sustain your operations. Now you need to, the Bitcoin is at 32,000, and you are selling 18,000 worth of Bitcoin. You may even sell more, worrying that, oh, it will continue to go down. At least let me get my money back. So this is what happens. Now the demand drops, and the supply is more, and the price continues to go down. But also what happens is that this also kicks out a lot of those miners from the competition, because they cannot sustain their business day-to-day operations. So this is why they say Bitcoin difficulty is dropping historically right now. Bitcoin difficulty dropped by 24%. So what happens is, what difficulty means is the computing power required to generate one Bitcoin. So like in our example with 400 machines, we anticipated creating, when Bitcoin was 50,000, we thought we'll be generating about, because the difficulty was at its peak, we thought we'll generate about 8 Bitcoins a month. Now that the difficulty has dropped, China has banned mining, so a lot of miner has gone out of business. We will be able to mine 10 to 11 Bitcoins a month. So this is a win-win for me. If the price goes up and I mine less Bitcoin, I may sell, and I'm appreciating, right? My assets are appreciating. Price is so low, but if I'm mining more Bitcoin, my ROI remains the same. So this is a great time to start mining Bitcoins. Actually, this is like the perfect timing to put your operations in, because the Chinese miners are out of business. Small miners couldn't sustain when the price dropped. And this is exactly what happened with us. That's why I recommend that you start with someone, or you start at a larger scale. Yeah, a lot of people also ask me, can I mine Bitcoin at home? Yes, you can. You can try that, but I consider it as a hobby. Your home network, your home computer, your home AC and whatnot, I don't think would be set up to handle something like Bitcoin mining. On top of that, the noise it will generate. So I highly recommend, yeah, if you want to look at it, someone like me who loves technology, I also thought about doing it. And then I realized it's not worth my time, because I always look at ROT, return on time. ROI is important, return on investment, ROR is important, but ROT is even more important for me. So thank you for watching. Please subscribe on YouTube or Apple iTunes, and let me know what you think of this episode. But I will continue to mine Bitcoin, and especially we are using a lot of green technology. We are in US. Our mining operations are with a pretty large hosting provider, which provides services to a lot of publicly listed companies. So we'll continue to do that. Their mining facilities operate on grid, solar, and wind. So it's mined using green technologies. So I'm looking forward to continue this operation. But if you have any questions about Bitcoin mining, or if I can help, please reach out to me. Thank you so much for listening and watching.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!